Hey folks, Bob Desmond here. It's December the 4th. Let's do a contrarian chat. Let's talk about the markets today. Before we do that, before we get to the charts, I want to talk about an article I just came across. Not an article, it's a headline more so. Jim Paulson, who's a strategist, and happens to be a good guy. I happen to like him. He's one of the talking heads that's actually pretty honest, that goes on to CNBC. So I found it very, very strange and very unlike him to make a comment like this. And I found it very strange that they would make this a headline. Strategist Jim Paulson, it's okay to buy stocks before final tax cut passage, but sell afterward. Okay, forgive me. It's a done deal. It was a done deal over the weekend. So I don't know what CNBC is doing here, and it's very unlike Jim Paulson to encourage an investor to go in and buy a stock for a few days and then sell afterwards. That's pretty much what they're saying here. Now, investor, as they use here in their first bullet point, an investor doesn't go buying a stock in anticipation of a sell-off after the signing of legislation, which will be done in less than a month. That is a speculator. That is a trader. So you need to ask yourself, what is CNBC doing by posting this headline? Because what Jim Paulson was really saying was that you had better in 2018 get ready for a correction, and you had better diversify out of high beta tech and into, just like I said yesterday on best stock charts, out of technology and into the banks, into energy. And that's exactly what Jim Paulson said. So you have to ask yourself the question, on a day where the stock market was up triple digits in the morning, and this was posted about 6 hours ago, that makes it 12 noon Eastern Standard Time. What's CNBC's agenda? Why are they driving such misleading headlines? What they're trying to do is to keep you optimistic. This is why traders lose money in this market. I don't care if they're experienced, inexperienced. They trust the system. What's the system? The system is the financials, the banks, the brokers, and the government. Also, the media. They are the message deliverer. Now, why does the media do this? Advertising. Who is the sponsor of this page right now? JP Morgan. So I would really caution everyone about trading off of headlines. It is very dangerous. Do your due diligence. And it's one of the reasons why I started the Contrarian Trader, just because of stuff like this. Do your due diligence, please, and learn the charts. Because if you watch the charts, and if you can go back to best stock charts yesterday, I went over a whole bunch of symbols. I'm going to revisit them on Wednesday, best stock charts revisited, and you'll see a list of symbols I went over. I'll link to the video at the end of this video, and you can take a look at it. And if you want me to go over any of those symbols, I will on Wednesday evening. Just leave a note in the comment section below, and I'll go over the symbol. But what the charts were telling you going into this week was that the market was extended. Now, I predicted that TD Ameritrade, it would rally. It did. But I said, don't chase it. It'll probably rally into this week. This is what I told members yesterday. This is what I told folks on best stock charts yesterday. Don't go chasing TD Ameritrade. Now, you may be saying, Bob, I don't want to argue with you, but the shares are up 3% on the day. What's your problem? My problem is this, is that if you allow the headline news to dictate your trading style, you're going to go bankrupt. I'm telling you right now, you're going to go bankrupt because you ran the risk of buying while, yes, on an up day, you saw the shares pull back off the highs of the day. And what this is implying, this wick, shadow, what it's implying is that there are sellers above and they're selling into strength. You don't want to be part of that. You want to buy the pullback and then add on a breakout. Simple as that, right? So just don't go chasing these stocks. Now, with regard to the S&P 500, now members, we're going to go over this on Market Wrap. So I'm going to do a greater deep dive into these charts. With regard to the S&P 500, what you saw today was a bearish key reversal, a very bad technical setup. I think that we're going lower. Is it a guarantee? No, there are no guarantees. There's a probability, and the probability of us going lower is very high, folks. So please don't go chasing these stocks, and take a look at what the market was doing on a 15-minute chart when CNBC was putting out overly optimistic headlines. The market had gapped up, we pulled back, and then we rallied. Now, had we taken out the day's highs, no big deal. But the problem is that we put in a lower high. Now, keep in mind that the vast amount of volume in the market is high-frequency traders, algorithms, not human beings. So let's put this into context of how the computers see it, all right? So they see the market move higher. They are in optimistic mode. Then the market pulls back, rallies, puts in a lower high, and begins to stall. The computers go into neutral mode. Then, as we fail to take out the day's highs and then roll over and take out the day's lows, the computers go into panic mode and they sell. So this is why you never want to buy a market that is being spiked higher by the bright green futures on a news headline. Please don't do it to yourself. Let's talk a bit about Facebook. Yesterday on Best Stock Charts, I'll link to it at the end of this video, I mentioned that I was bearish on Facebook, and on a daily chart, we broke down today. We were down 2% on the day. We didn't even put in a new daily high to rally with the market. That's how weak Facebook was. So it's showing relative weakness versus the S&P 500. Not good. So you're seeing a leadership change. Same thing here goes for Google. Google, I had a little bit of back and forth with nice guy, Nicholas. He left a note on my Best Stock Charts video yesterday, and he said that he was looking for a filling of the gap here. And I tend to agree that in all probability that we will try to hold this support level. But the question then becomes, if we do rally, do we put in a lower high? Much like I just spoke about with the S&P 500. And if we rally, do we fail? And if we fail, do we take out this low? Because if we get that rally and we break down below today's lows, brother, look out below for Google. Because on a weekly basis so far, and it's only Monday, 4 full trading days left to go, a lot can happen. But last week, I spoke about this yesterday on Best Stock Charts. We had a bearish key reversal last week. And this week, we have a continuation breakdown on Google. So please be very, very careful with these stocks as they are showing relative weakness versus the S&P 500. They were leaders. They are now laggards. So please be careful. And that's it, folks. You know the deal. Give me a like, subscribe to the channel. And on Wednesday, I'll be doing Best Stock Charts follow-up. Go to that video. You'll see a list of symbols I went over. If you want me to go over any of them in particular, I can't go over them all. On Wednesday, I will. Just leave a note in the comments section below. Everybody have a great evening, and I'll talk to you later this week. Be well.